Hi, everybody. I'm Kyle Ellicott, your host for another edition of VCTV. Welcome back. We are here again with another double episode day of VCTV, as we have been bringing you all week, as there's so much to talk about when it comes to industries, technologies, and regions around the world, and everything that is shifting, shaping, and expanding and contracting. So tons of stuff to talk about. We have already covered everything from food to marketplaces to manufacturing to supply chains to consumer and e-commerce. And today we're bringing that one step forward as we look at finance, blockchain, and a little bit of machine learning and data a little later today. So we're continuing this trend as we look at each week, building up to the end of the week. So today's episode is all about finance and blockchain, two of my favorite subjects, and I'm joined by some of my great friends and some new friends as well to talk all about this. There's so much happening in this space. As we know, almost every week, if not every 2 weeks, we are talking about this episode or this topic here on VCTV. The topic of technology around blockchain comes up in almost every episode because, as we have discussed on VCTV, the digitization we have gone through over the last year, the accelerated digitization of all industries, has impacted everything to also include this new level of infrastructure, of which blockchain is playing a key role in most of those cases, not all. We're going to talk about why that is here shortly. The way that we look at finance, it's not just about finance traditionally versus decentralized finance or DeFi, as we've talked about in other episodes. It's more about the open finance world that we're moving into and looking at how finance is being redefined, not only in terms of how we look at it throughout enterprise and how we look at it in industry, but how we are affected through that as well as consumers. As we talked a lot yesterday around marketplaces and also e-commerce, how we're buying things, how we're not buying things, whether they're virtual, they're digital, they're physical. There's all kinds of things that are happening so quickly that you need to know about this. So audience, welcome to today's show. For those that are tuning in for your first time, thank you very much. For those that are back, thank you as well. We're glad to have you. If you're an investor in the audience, we'd love to have you on a show like today and share your thoughts and insights like we're about to here. So do please reach out and we would love to find the right episode and topic for you. Entrepreneurs, this is not just for us as investors. VCTV is also for you. There is a virtual stage that you can get up on and share your presentation, your company, your product with us. You get the chance to pitch us, 5 minutes on stage to pitch us one-on-one along with our live audience. Awesome opportunity. If you're looking for it, do reach out to Elena, to the LA Token team, and or myself. We'd be happy to find the right opportunity for you. And usually on this episode, I drop a ton of news of what's happening in this industry. There's too much. It's too much today. So instead, I'm going to leave it to all of our guests, except we did have one big announcement I'll mention today, yesterday that happened that's worth noting is that Consensus did acquire JP Morgan's Quorum blockchain. And JP Morgan also made a strategic, undisclosed as of now, investment into Consensus. And what that means, as of right now, it's going to be a merger of the Consensus blockchain into what Consensus is already doing, helping businesses to do both private and public blockchain work. And we're going to leave it at that. Tons more to talk about. But again, before we get started, I want to introduce all of our guests, but I also want to give a big shout out and thank you to Elena and to the entire LA Token team for making VCTV possible every single day, multiple times a day on your screens, your devices, anywhere in the world. With that, let's have some fun. All right, first and foremost, welcome back, Matt. It's a pleasure to see you. It's been a few minutes, but a little intro, a little background to those who may not know you.
Oh, well, thanks a lot. So I'm Matthew Lemerle. I'm based in Silicon Valley, and I'm an investor. I operate the leading blockchain venture fund of funds. So we are investors in 15 or 16 of the leading blockchain VCs around the world. And as a result, we're also investors in 10 of the 16 blockchain unicorns. And my personal focus is investing in internet, fintech, and blockchain, which is why I signed up to be one of the team of panelists. And I'm very excited to be with all of these other luminaries here today.
And shameless plug, you have a book or a few. Oh. I'm going to shamelessly plug it for you, but what's the title of the book?
Well, so the breaking news is that my new novel, The Ministry of Bitcoin, which tells you who Satoshi Nakamoto really was, is about to go live next week. So that's really the book that I think everyone who's interested in blockchain and Bitcoin has been waiting for. The secret of why Bitcoin was created, who created it, and what went wrong.
I love it. So audience, stay tuned. We'll make sure to get a link and to share it next week from Matthew as well. So get excited, because I am. I wish we had a emoji, because that would have been perfect for that moment. But thank you very much, Matthew. Looking forward to the new book. And if you haven't had a chance, do check out his previous books as well. Shameless plugs. We've got them all day. Brett, welcome back to the show as well. A little intro, a little background.
Sure. Yeah, thanks for having me. Always a pleasure to be on these. Brett Noyce, founder and partner at Unventures. We're an early stage investor syndicate. So we work with about 500 VCs throughout the United States syndicating deals. Our primarily focus these days, we've expanded. We were initially a Fintech incubation program. We work with a lot of blockchain companies. Actually, through our events, we're part of the ICO era of Law Token. So we've had a lot of early touch points with a lot of the companies that have now grown up since that era, all good and bad. But we're currently focused on primarily areas of focus are personal finance, SMB automation, data and compliance. And I feel like I'm missing one. Oh, future of work are kind of the areas that we are kind of mostly focused on. But in general, yeah, always happy to see good deals with great founders.
Wonderful. And go Knights, since you're rocking it today. We'll give you a little bit there. Gary Fowler, welcome back, Mr. AI Master. Little intro, a little background.
Hey, good to see you. I'm always waiting for it, Kyle. I don't know what it's going to be, but I'm always waiting for it. Anyhow, thanks, Kyle. My name's Gary Fowler, and I'm a serial entrepreneur. As I've said many, many times, I've done 15 companies. The largest exit I was involved in is Click Software. I was on the original team, actually named the company Click Software, sold to Salesforce for a little over $1 billion a year ago. I also, talking about the future work, I am the co-founder of Viva.ai with a billionaire from Russia, David Yang. And so we do remote employee engagement. We've been working on this for 4 years, so it's not a COVID experience. But I started the first accelerator in Russia. I started the #1 private corporate accelerator, GBA Launch Gurus. I love AI. And so if you got cool AI, I'm an investor, I'm an entrepreneur. I mean, you name it. I just love entrepreneurship and AI, and believe that the digital transformation is pushing us forward quickly. So thank you, Kyle.
Wonderful. And welcome back as well. And Rana, welcome back to the show. It's a pleasure to see you. A little intro, a little background.
Likewise, Kyle, good to be back here. So I'm Rana Gujral. I'm the CEO of Behavioral Signals. We're a deep tech AI company focused on building some compelling solutions for the banking sector. We're really focused on at this point helping with the collections outcome, the whole NPL landscape with the NPL ratios going off kilter. So that's really our current focus right now. My background, similar to what Gary said, been an entrepreneur pretty much the vast majority of my career. Involved in many multiple startups, had a few exits. I do invest frequently, mostly early stage, post-seed, pre-A is my sweet spot. Based in Silicon Valley, so work through a few major funds out here as an LP, but also various syndicates and some private personal deals as well, and certainly very involved in this landscape. My interest is in AI, deep tech, but very much so fintech as well. I've been involved in a lot of interesting fintech plays, and so I think all of the above, and happy to be here, and I think it's going to be a fun conversation.
Wonderful. And just for those that may be first-time listeners as well, NLP, natural language processing as well. Blake, welcome back to the show. It looks like you're joining us from the stars today, somewhere far, far away, but we are appreciative you could join us just for a few minutes.
Yeah, happy to. I'm actually based in Austin, Texas. My background in VC, venture debt, Left a large debt fund in 2017 to co-found Noble Block Capital. I'm the former chief investment officer there. We were investing in blockchain-based capital markets infrastructure, custodians, ATSs and exchange venues, cap table platforms. And now I work with one of our portfolio companies, Decide Bertalo, which is a on-chain cap table platform, building API connections to various capital markets participants, your custodians, exchanges, broker-dealers, and connecting investors and issuers to sources of secondary liquidity. I'm also in the formation stages of a new fund, a small VC fund focused on the DeFi space.
Oh, maybe we'll get a little bit more of a tease on that. I mean, look at this. We got a new book, a new fund. We've got all kinds of good information for you today, audience. So be happy you tuned in. We're going to dive into all of this here in just a second. So gentlemen, I want to start with kind of the big overarching questions. Where are things today, right? Where is the current state of both fintech and blockchain? As I mentioned just in the beginning of the show, so much has happened. And so much is continuing to happen. We seem to have either new protocols or new technologies, new use cases, new everything, what seems like almost every few hours each day, which is insane, but also very exciting as well. So we'd love to come to each of you and get your view on the current state of things as of today, looking towards the future. So Matthew, let's go ahead and start with you. Where do you see things as the current state today?
So I think we're in the middle of a 50 or 60 year transition to a completely digital economy and a completely digital world. It's taken us about 30 years to create a global communication platform called the internet based on TCP/IP. And all of us are connected right now. We're using it to live stream and allow anyone in the world to listen to what we have to say. But the reality is we do not have native digital monies and digital assets embedded in that internet. And that's the second shoe that has to drop. And everyone around the world understands it at this point. In 2020, 2018, 2019, there was a lot of resistance. But now central bankers and the largest banks and payment companies in the world are on board. They know we need native digital monies. They're beginning to understand we need to get paper out of the asset world as well. And so that's where we are. We are in the process of digitizing the transactional layer and the investment layer of everything we do. And the problem is it's really, really hard. So it's going to be 20 or 30 more years before every bank, every payment system, every fund, every investment is digitally natively enabled. It's not going to happen fast, but this is the world's biggest industry. And it's not just a vertical, it's a horizontal too, because all of the world's commerce is going to be digitized. And that's why the people on this phone know that this is probably the biggest wealth opportunity possible in the world today, along with life sciences, because we are going to digitize all human activity and the transactional layer needs to be built out. So I think that's my view of where we are.
That's I would have to agree. Based on everything I've seen and read, I think you're spot on. And we're already seeing, hundreds of millions of dollar economies start to exist today. And to Matthew's point, those things are only going to continue to grow exponentially over the next 20, 30, into the next 50 years. So excited to see where that goes, and we'll come back to it. Brett, to you, your view on the current state of where things are around these technologies.
How to articulate my thoughts. So, I mean, I think I love Matthew's vision and where we're going. It's exciting. And I mean, I definitely agree with everything he said. I feel like for us, like I guess maybe my perspective's, I don't know if it's unique, but, we spend most of our time kind of working with conventional, software-based companies, conventional startups is a large portion of what we're doing with Unventures these days. But then we also look at, just as not curiosity, but interest in what I want to see exist in the world is the blockchain stuff. And so it's with blockchain in that world is like in the DeFi space, these are all the things that really get me excited, and probably everybody on this panel get excited about. So what I love is that they've kind of went from theoretical to they're actually becoming real things. A year ago, I got very excited about the DeFi space. And then worked with a series of projects that we just couldn't get funded. No one was interested, and then all of a sudden, you don't know what's going to happen. All of a sudden, it just feels like nothing happens, and then there's this massive spark in this industry. So I continue to be more drawn to this industry, and I'm honestly having this internal conflict of whether we continue to work with like mainstream companies that we know, that we can raise capital for, or do we put our energy into the, where the future is. And I'm kind of hedging it. So I don't know if that really answers the question, but I always feel like this is the most exciting and interesting area. It's the most futuristic, but I mean, the timeline that Matthew, played out is the truth, right? It's hard when you're in technology and you want something to happen today, and then someone says, "Oh, it might be 30 to 50 years," and you go, "I don't know if I can make it that long," right? Like, I don't know if that works for my, if I have the patience or the bandwidth or the capital to survive that long of a timeline to mass adoption. So
it's a good point. I mean, look, we've been groomed, Matt, and Matthew brought this up with, the idea of the internet and how long it's taken to get us here to where we are using the internet the way we are. But we've also kind of become accustomed to things happening so rapidly, happening so quickly, new innovations popping up, whether it be hard or soft goods, that they're here much faster, right? Things seem to be on a quicker pace. And with this industry, I think we all feel that way, as we're all super excited, go, 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 go. But really, to make a large scale mass impact around a lot of these things, it's going to take time as well. And mostly because we're not just launching respectfully a new consumer product that's, being started from scratch and going out to the world. We're in some cases trying to redefine what we've had in place for hundreds or thousands, depending on which book or which point of reference you want to use, thousands of years. So this is a very big, impactful thing. But I agree, it's hard. It's great to get excited, but then you have to kind of bring yourself back down to reality, and how long that stuff will take as well. But to Gary, to you, where are you at with the current state? How are you feeling about the current state?
Yeah, so when we talked about the panel is investments and pivots during the pandemic. So guys, I don't think it's going to be 60 years. And here's the reason why. We're forced to do things entirely differently. And I've said on multiple shows, look just like at the Zoom effect. 6 months ago, they had 30 million participants and active users every day. They got over 300 million. There's an incredible opportunity. This digital transformation is upon us, and it's affecting every facet of fintech. Think about it. Areas like conversational AI, hyper-personalization. We are thrust into a situation where we either change and go forward or die. It's not that kind of issue anymore, guys. Seriously. And I have a on the way unicorn called Eva.ai. And when we did this 2 years in remote workforce management, we started it. People said, "Oh, why would you do this?" People wanted to work in the office. Our inbound inquiries were up 38x. 38. It's crazy. The opportunity is now. So the startups that look at things like artificial intelligence, unsupervised AI, ladder networks, variational autoencoders, the blockchain. How do we secure the system? How do we make sure that the bad guys aren't going to get in? How do we make the process more efficient? This is it. It's upon us. I mean, it's not, seriously. I mean, here we are. Sometimes people are ignoring this pandemic, but it could go on for another 2 years. Let's use what we have wisely. Let's get out. We have a credible world, virtual world, that's now going through the digital transformation. Let's jump in and let's take advantage of it in a really good way to make things better.
Jumping in physically and virtually with you there, Gary. I'm in. But all jokes aside, I absolutely agree. I mean, there's so much of an opportunity here as well. And Rana, I want to come to you next. In terms of the current state, where are you seeing things?
Yeah, I mean, I'll tell you, the transformation that's happening right now, it's certainly a lot bigger and a lot deeper than most people really understand or have grasped around. it's pretty phenomenal. I mean, it's seismic, and I do agree that we're living in. I mean, we're seeing history unfold right in front of our eyes. This was a trend that was on its way for the last, I'd say, a decade or so. But this was the much needed sort of point of acceleration. It happened in a really bad way, but it's happened now, and I'm really having a lot of very interesting conversations, and I'll give you an example. I'm not going to name names. I don't want to get in trouble, but I got on a call with COO of one of the top 5 banks, in the world, and he's 4 or 5 minutes into the job, and so we're having an interesting conversation about sort of where and what's trending and what your needs are. And what I heard from this gentleman was that, so he entered into this bank, and a lot of other financial institutions, they have very dated processes, right? So in terms of like basic NLP and conversational AI or AI, there's a lack thereof. There's no AI. Even in terms of the basic process, they don't even have a speech to text or ASR engine into their contact centers. They're collecting some very basic analytics. And that's the reality of a lot of these banks, under the covers. It's really dated. But today on the charter, like in the C-level discussions, the goal is to digitally transform in the next 5 years, which is go from here to here, like overnight. And it's unreal expectations. And because they've sort of suddenly woken up and there's like, we can't even function as a bank. Last 6 months have been like an eye opener in terms of how inefficient we are. How would we deal with this if it happens again? Or in general, I think even if they've been able to sort of, get back to a normal mode of functionality, it's like they're looking at the competition. There's like, these nimble banks, these smaller, these neo banks, they've just suddenly accelerated, and they've taken a big portion of the market share because they were able to get their act together. And so there is that chaos that we're looking at in terms of what the desire is and what the reality is in terms of how fast they can adopt some of these technologies. That is very interesting to watch. And I also think it's going to be very problematic because what I see is that 2 trends, right? If I have to summarize it, I think the transformation towards digitization is very real, and it's much, much bigger than what we actually can fathom right now or realize. I think we'll look back at this time, 5 years from now and say, this was the year when it all accelerated, it was triggered, and it went from 1x to 10x. But I also think a lot of bad choices are being made right now. I think there's a lot of money being spent in wrong places, in decisions which are questionable because there is chaos. People are making some hasty choices in terms of sort of how they, and there's a lack of, I guess, awareness around how to do that transformation. So there's some better than others. And there's another trend that's I'm looking at, mostly from an investment standpoint, is that the banks are getting a lot more active in the investment scene, right? So they're almost sort of giving competition to the traditional VCs. And so the Goldman Sachs of the world and JP Morgans of the world, they're coming in and they're like investing directly. They're writing checks directly to fintech startups. And oftentimes, it's purely from, having a piece of the technology pie perspective, not even from an investment mindset. And big money is being splashing around. And so one of the things that we're looking at in the VC investment circles is like, how does that change things, right? So if you're an entrepreneur of a really solid fintech company, you have an option. You could go directly to a bank and say, hey, we built this product for you. We would like you to buy this and work with us on this, but would you also like to invest? And often the terms are a lot better and the check sizes are a lot bigger than what they can get from the VCs. And so that's shifting, and that's really happening. I've personally come across that situation a few times, and that is a very interesting trend. It was something more of an exception rather than the rule, I'd say a few years ago, and now it's becoming very, very common. And it remains to be seen if that's going to stick and stay, and if banks, like a lot of other, telcos sort of made that switch, right? So there's like Comcast Ventures and a few others, so they've developed sophisticated VC arms, and it looks to me that trend's now coming into fintech, and banks are getting really serious in more active direct investments, and that's going to be really interesting to watch.
Well, and not just banks as well. I mean, let's go even further. The merchants. You've got Visa, you've got MasterCard, you have Google, Google Pay, you have Samsung Pay. You have a roster of companies that deal with the transaction banking payments space sector, we'll call it, that yes, are going after it. I mean, look at what Visa did, and then later MasterCard, but Visa's fast track program, first making an investment and then just bringing companies more or less into the fold, just testing and trialing to just fully acquire if and when ready, if they even need to. I mean, it's there's a lot happening to that. And Brett, I know you have a comment, so I want to get to you in just 1 second if we can. I want to make sure, Blake, you get your chance to tell us your view of the current state. And then I've got a good question for Rana and Blake and Matthew to come in on. So Blake, to you. You are on mute.
Yeah, I think the state of the industry and investment landscape is actually quite strong. I'd agree with Gary and Rana that things are going to happen a lot quicker here than we expected. I hate to say the phrase gradually than suddenly, but over the past few years, particularly in the blockchain space, you saw this, tokenize everything, get it on the blockchain ethos. A lot of those opportunities were misfires, misapplications of the technology, but it seems to have honed down on payments, capital markets infrastructures, trustless transfers, and identity, and a few other applications, IoT, but we'll talk about that on another panel. So the field has gotten a lot more focused. You cannot raise money with just a white paper anymore. You need to have a working product. And with regards to digital transformation, this is something that companies have been doing for 10, 15, 20 years, but they've been doing it in a vacuum. They, get all of these technologies and technical infrastructure in-house, but it doesn't communicate to anybody outside. With Visa and Plaid, MasterCard and Finicity, you saw that these companies were now building APIs between these siloed databases and other sources. And these connections are kind of allowing that value to be communicated more efficiently, and for more exciting things to happen with the technology. So as we start to enter this kind of next phase of digital transformation, where the connections and the intersection of these technologies become really the drivers, I think the business environment where it's hard to have people in an office today, the individual environment where you're worried about the macroeconomic exposure, how do you hedge that? I think that all of these pressures are forcing people to build quicker, more efficiently, and do it in tandem, move in lockstep together. And that's a really exciting trend that you've seen emerge over the past 12, 24 months.
Yeah, and I think we're that kind of teases us up perfectly for the question that I want to drive us into. So, Brett, thank you, Blake, and Brett, we're going to come to you on this first. I mean, let's dive a little deeper on the bank side. So more, fintech and blockchain, but let's take one level deeper on the banks. You have a little bit of experience, both, researching this, but also investing in the area around fintech. So tell me a little bit more about what's happening at the level of banks in the past, 5 years, as things have really transitioned and really been put a lot of effort into that area.
Well, I don't know if I'll go the same direction you're going, but I just kind of wanted to build on what Rana was talking about. My experiences for over the last 5+ years, I've built different incubators, all fintech based incubators, where we really had a collaborative versus disruptive type of ethos, and we were trying to work with banks, and we really identified areas where we wanted to work with. Like a lot of my advisors work for large global banks. They're head of innovation. They're doing the best they can. they're implementing technology and digital transformation. They're actually they're a lot of those companies are kind of at the bleeding edge in a very slow moving industry. Where I found a lot of frustration is where we tried to bring that same type of, we wanted to be the outsourced innovation person for these, small to medium sized banks. And, we're working with different ways to partner with them, see our companies, work with our companies. And they kind of figuratively gave us, the middle finger and had no desire to work with us. And then suddenly COVID happens and they're like, oh, you know what, you know, like we worked with like early on with a company that was like Zoom meets Slack for financial institutions, and we couldn't sell it to anybody. No one wanted it. No one needed it. No one saw the value in it. And then it's all of a sudden COVID happens and it's like, oh, is there a solution for this? And it's like, yeah, that company's 3+ years dead. So I'm like very cynical about how banks, like I think in general, like we have over 8,000 financial institutions in the US. And if we lose 7,000 in this pandemic, I think we'd be a little better off, right? I feel like these institutions have like just, you know, wanted to do business as usual, and then and people like myself have been running around saying, hey, the world is changing, we need to go more digital, here's a company that's doing this, here's a way to work with them proactively. And, you know, my personal experience was it just wasn't received well. So we'll see who makes it out of it. And honestly, it's like it might be a really good opportunity for us to shed some of the institutions that are, you know, too archaic, you know, that maybe don't need to exist. So we'll see.
Well,
right? I think there's a great new opportunity for new neobanks and digital, some of the other banks that are merging, and that we maybe get a new version of, you know, our financial institutions, at least, you know, in the United States.
Took the words right out of my mouth. It was literally going down that path around neobanks, and then also, you know, there's continued commentary around every company wanting to be a fintech company, and I think we're starting to see a transition around that, where more and more companies are seeing how they can leverage financial technology to be the intermediary or just become the go-to. And not have to have a bank sit in the middle or anything of that nature. And Matthew, I want to come to you. Oh, sorry, go ahead, Brett.
Let me just add one last thing. I mean, companies like SnapSpy and kind of those people that have built platforms have really, like, the landscape is a lot different than it was 5 years ago. The ability to like ramp up a fintech company with all the regulations and all the challenges, like it was a really, really hard field to get into and compete. I mean, it still is, but I mean, there's these infrastructure layers that have been built in the last 5 years that have really changed the game.
Well, and that's before I get to Matthew, I mean, infrastructure is the key here, right? We've had all the consumer apps to in many ways. Now it's redoing the infrastructure. It's kind of working backwards in some cases. But Matthew, I wanted to come to you. You know, you mentioned in the beginning around this new digital economy we're building towards, and these native digital assets. How does that look in terms of sticking with the banks and the financial institutions? How does that going to impact them? How does that look for them today? You know, furthering on Rana's point and also Brett's as well. Oh, you're on mute. All good. I'm shocked I haven't done it at least once yet. So there you go.
No, I'm pressing the space bar, which is supposed to take us off, but Zoom didn't help me there. So, you know, when we say banks, if we were to say stores, you know, shops, it would be just as diverse a conversation. So we're talking about some of the world's biggest institutions. We're talking about some of the world's smallest institutions. We're talking about some of the world's oldest institutions and some of the newest institutions. So just to keep this really simple, and if we segmented banks into global universal banks, names you know, Citibank, UBS, Nomura, and these people have huge capability, they have large tech teams, and they have a lot of proprietary technology, but they also have the burden of legacy. At the other extreme, you can imagine a small community bank in some town in Middle America, 1, 2, 5 branches. They have no technology. It's all outsourced. It's outsourced to Fiserv or FIS, you know, and they rely upon other people's technology. And then thirdly, let's just put out there a segment which are called digitally native challenger or disruptor banks. You know, born mobile, born electronic, Sabre and Signum in Switzerland, where we've been working, or Ziglu and Monzo and Revolut in London, or Advanti and River in the US. Now, this conversation differs depending upon which type of bank you are. So obviously the easy one, if you're an entrepreneur and you've got something that you're ready to bring to market, if you talk to the digital disruptor banks, they're ready to go. Revolut is deploying Bitcoin access in the US. Sabre and Signum already have digital asset custody up and running, not just for utility tokens, but for security tokens too. So that's an easier conversation, and those people are going live right now. And at the other end of the spectrum, the Robinhoods and the Coinbases, where we're investors, they're beginning to migrate to look more like banks, because they're adding additional products and services and assets. We're also investors at Uphold, which has pretty much every asset on its platform already. So think about that, but then contrast that with one of the world's largest banks, like JP Morgan. JP Morgan has a real challenge to deploy new technology when it has massive, legacy technology. And in fact, they've just decided to hand over at least the code of Quorum to Consensus. The people of JP Morgan are not going to join Quorum at Consensus. So you sort of wonder, what is Consensus really buying? I hope it's not spaghetti code. But we'll find out later. Obviously, they're buying a brand. So those big banks, heavily regulated, have to move slower. But that doesn't mean they're not capable, and don't count them out. Amazon and Alibaba became the world's biggest electronic commerce environments, but Walmart.com and HomeDepot.com still get plenty of business done too. And then stuck in the middle are what Brett said, the thousands and thousands of community banks and credit unions and savings and loans. And they don't have the capability to go live on any of this stuff. So they're looking to their providers, whether that be Visa and MasterCard or Fiserv, where my wife's on the board, or FIS. And they're sort of saying, give us some guidance. And what's very important in that context are what the regulators are saying. So the OCC comes out and says national banks have a green lit to provide crypto, well, at least Bitcoin, access and custody. And that's a big statement. But in practice, very few banks can take advantage of that statement in the short term because of all of these challenges. So the reason I segmented that conversation out in a very simplistic way, because we could have segmented it a lot more dimensions, but I tried to make it simple because I wanted everyone to understand this is a very nuanced conversation. If you're an entrepreneur, you're building some tech, the digital and disruptor banks are probably the partners that are going to go to market fastest and easiest. If you're going to speak to the national banks, the big global and universal banks, it's going to be a long, slow conversation, but eventually they can help you get up to, scale quickly, but you're a technology provider and they're going to take it to market. And then if you're in this broad in the middle, it's probably not going to happen anytime soon. And that's why I still go back to the 10 and 20-year conversation. I think it's going to be a long time before every bank in the world has all of its products and services, its assets and its currencies digitized. And then the big wild card here are the central bank digital currencies, because China is forcing its own people to build the infrastructure and piloting for the digital yuan. And I do actually think the OCC announcement is partially to ready the way for infrastructure to support a digital dollar. And we have to enable banks before we can have central bank digital currencies. So that work has to begin now.
Yeah, absolutely. And there's so much being done in that spot. And if you haven't had a chance to check out the video, there is a video that was circulated around on the actual active test pilot of that from the consumer standpoint, right? A number of corporations and banks have been testing it live in China, but we actually got our first look outside of China as to consumers using it as well. And Matthew, I think you're spot on as to where that's going. And we talked on previous episodes about JPM's big project in Singapore, along with Tesamec and what they're doing around Project Ubin. And rolling out that infrastructure and kind of skipping over the idea of central bank digital currencies and just rolling out this entire digital infrastructure now that apparently has been in development for 5 years. They didn't say anything about it. So it's fun, exciting projects like that, to both you and to everyone's points. These things do take time, and in some cases we don't even know they're happening. To Rana's point as well, is some banks are working on this, some are not, and those that are may not be very public about this. And Matthew's point of, you may be a technology provider that they're going to take you to market, take that as a win. That's a great opportunity for you as a company, especially at an early stage, to get involved and build and grow something. And with that being said, gentlemen, I want to come to opportunities. We've hit on a number of items here, but where are the opportunities? So if you're an investor looking to make investments over the next 5 to 10 years, for the longer play, because we've all, I think, can agree at this point, it's not necessarily a short-term 1-year bet. So over the next 5 to 10 years, where are you looking at areas of opportunities to start placing bets? And in the same respect, for entrepreneurs, where should they be thinking about building, or where are those gaps that they should be playing in as well? And Blake, I want to come to you first. Where are those areas of opportunities for investors, and also for the entrepreneurs looking to enter into this space?
Yeah, I think for investors, the infrastructure investment thesis is still very much intact. I think that there's been a lot of ground covered with that respect, but it's not done. As we've talked about, the banks are looking at this. The bigger banks have this. They have the most to gain from this. So I think that these, fintech APIs, that capital markets infrastructure, I think that's still a very exciting area. I don't think anybody's really gotten the exchange model correct quite yet. I think more on the private market side, that's going to be much more interesting. Public markets, they're already robust. You already have very efficient infrastructure, well utilized by most players. Whereas in private markets, you just have nothing. You have spreadsheets, you have certificates, and none of it's connected, none of it talks to each other, and none of that data is usable. So those are two areas that I think are pretty interesting. From an entrepreneurial perspective, I think what we've been able to accomplish in the DeFi space over the past 12 to 24 months again, where the barrier is very low. A new project, there's one 2 weeks ago that spun up in 10 days. And then within another 24 hours had attracted several $100 million to the platform in liquidity. The barriers are low for this stuff. You just spin up a node, deploy, fork, and lightly edit some smart contracts, deploy those, and start focusing on building the community around it. So in terms of startup cost, it's efficient. In terms of building it, something that people want to use and actually makes a difference, that's an entirely different area. But what we've seen in fintech is, as we talked about earlier, it was hard to get started. The regulatory frameworks weren't that clear. You were competing with what were viewed as the bulge bracket banks and Visa, MasterCard, PayPal. Whereas now, you just set up on AWS, and those tools are available to you to start building. So I think we only see the entrepreneurial picture get easier to start. I think that the obvious opportunities start to dry up, but we're still very much in the picks and shovels stage with regards to capital markets infrastructure, and that's going to be what's needed to build these focused products for the consumer.
Absolutely. And Gary, to you, any areas of opportunity that you're seeing quickly as we come to the
I mentioned it earlier. The conversational AI, hyper-personalization, robotic process automation. Obviously cybersecurity is a huge issue. Think about as we talked about this digital transformation, the banks have to get closer to the customers, and they got to be able to use that data to be able to figure out exactly what the customers want, and also for collections, right? What's the best way to get to those customers? So, the opportunity is today. The opportunity is to start now. So compliance is another issue. I talked to PwC a few weeks ago. Compliance. How can we comply? Are we making sure we comply? So I think those areas, if we look at, are really hot, and anything to do, as I've said many, many times, with artificial intelligence, to be able to make it better, to be able to forecast what we have to do, is going to help to make the system a lot more efficient. So it's a dawn of a new era.
Absolutely. Rana, to you, areas of opportunity.
Yeah, I mean, I overwhelmingly agree with what Gary's saying on the conversational AI side, but then I'm a little biased on that. I think we're seeing it. We're seeing a big trend. I think that's a massive. I don't want to say it's a low-hanging fruit for the banks, but it kind of sort of is. It's like it's up for grabs with immediate, upside and ROI. And the proof is in the numbers, right? If you look at the amount of money being splashed on in conversational AI technologies by fintech, by financial institutions and banks, it's ginormous. And that's the number one area of focus, because it makes sense. It made sense 10 years ago, and it makes sense now, and it's almost urgent today. So that's a massive opportunity. I want to go back to what Matthew was saying earlier. I really agree that, when you talk about banks, compliance and regulations, and the handcuffs of compliance and regulations are really real. It's a big, massive problem, right? So when you really look as to what's holding them back in adopting new technology, it's not necessarily lack of awareness or willing to take risk. It's the inability to go adopt something which which maybe rocks the boat on their compliance and regulation balance that they've achieved internally. And that's very, very scary for banks. And that's almost a vast majority of the AI technologies that you see out there. They're unusable. Even if they solve a really important problem that they relate to, it's unusable by banks because of those constraints. So with that, there is a new opportunity, right? So what we're seeing is that there are companies and there are entrepreneurs who understand that now, and they're building newer solutions with compliance, with GDPR, privacy, security, not as an afterthought, not as a check mark, but with those considerations in mind for the fintech, right? So they're going to the bank and say, okay, we're going to solve X problem. But this problem, the solution that we've designed is built, with those considerations and for those considerations. So you are, you have no, you sort of removing your handcuffs in terms of sort of at least the barriers of, hey, I can't use it. Now, if you don't want to, or you don't understand the value proposition, that's an easier battle to sort of fight from that perspective, from an entrepreneurial side. And that's a tremendous opportunity. So if you're an investor, I mean, we're coming across a few of those, is that if you're looking at solutions, which might not necessarily even be the original solutions, they're solutions that have existed in the marketplace, and they have made a lot of inroads in, say, telcos and retail and other sectors, but it's eluded the whole fintech space. But now you've rebuilt it, you've redesigned it for the banks with all those considerations and capabilities. And it's almost sort of like talking about voice first, but it's really compliance first and regulation first. And that's a tremendous investment opportunity, because it completely removes the barriers, and the banks are much more susceptible to adopt them. And I think that's a fantastic opportunity ahead of us from an investment side, also from an entrepreneurial side.
Absolutely. And Brett, to you, quick opportunities as well.
Sure. Well, I'll run through them quickly. Well, first of all, I want to say a couple of things. Not interested personally in the short-term COVID, right? Seeing these things short-term, right? I like people that are thinking further into the future. It feels like there's a lot of people rushing in to solve these really, what I find to be short-term problems. Also, people that are doing Me Too's. There's a million different people trying to do a version of Robin Hood, right? Find something different, right? That's been done. It's been done well, and there's a million copycats. Building on what both Rana and Gary said, the area that we're really focused on, what we really like, is the data compliance piece. We know that's a huge piece. Where we see the missing gap, if you're thinking about where you want to be, is there's solutions, whether they're either like a Ernst & Young or like a software at the enterprise level. It hasn't trickled down to the SMB level. And we think that, the SMBs have the same challenges, but they don't have tools, right? So there's no one that we've seen out there that's made anything for data compliance for the small to medium sized enterprise. Other areas that we still see opportunity in is Insurer Tech, just because it's moved even slower than financial institutions. So we're still seeing a ton of stuff in there that's interesting just because it's really antiquated in the speed. And then the final one that we're not necessarily looking at today, but e-commerce. As we go to a more and more digital world, I think we'll see less and less brick and mortar. So, I mean, stuff in the e-commerce space, I think could be really interesting. There's probably going to be some big opportunity going forward.
Awesome. Matthew, to you, any quick opportunities that people
Let me
should pay
build on,
attention to?
I'll just build on top of what the others have said, because I think those were great answers. From a geographical point of view, there's great opportunities in Asia, North America, and Europe. So I don't think there's any lack of global opportunities. From a stage point of view, we think it's better to be an early stage investor, but it's hard to get access to the best deals. We do a little bit of mid stage, so we just put money into the rounds at Wire, Uphold, and Brex, most in the sort of Series C timeframe. But our goal is to get most of our money in the Series A round, and that's why we have a fund of fund. By the way, because I do operate a fund of fund, I just want to highlight I'm not making any solicitations and I'm not proposing anyone invest into our fund of funds. So that's from a stage point of view. In terms of thematically, I agree with what the team has said. There's a lot of opportunities at the foundational layer, protocols and infrastructure. I do think at the transactional layer, a lot of the trains have left the station on wallets and exchanges, but there's still so much more to do around settlement systems, transfer systems, trading systems, and so on around the world, as well as payment systems, obviously. I think that if you're an equity investor, you have to have the long-term view, Kyle, which is what you talked about. But what's interesting about this space clearly is you can be a short-term investor, speculator as well. And as vice chairman of SFOX, which is the leading independent crypto prime dealer, I have to say that that's the other way to play. I do believe that everyone should have a small percentage allocation to the leading crypto assets, 1%, 2%, 3% of their wealth. And it is asymmetrical, as Dan Moorhead says. You could lose all of that 1%, but you could also turn the 1% into 10%. So I do believe that people should have some exposure to Bitcoin. And then probably they should have some to one or two of the others, maybe some XRP. I noticed Polkadot, by the way, is up 6x in a relatively short time frame. Yes, exactly. But I'm not proposing and suggesting any specific token. I'm just making the general point that a small allocation to some of the crypto assets is probably a smart move, but it's difficult to know which of the winners should be diversified. And that's
absolutely
the general view.
Absolutely. And this is a long-term game to your point. And gentlemen, we are at the top of the hour, so unfortunately I have to come to where everyone can find you at this moment. But thank you so much for sharing all your thoughts and insights. There's so much more we can unpack here. We could do a 4-hour episode. We could have our own conference, mini conference, a mini no conference, if you will, between all of us sharing more and thoughts and insights on this. And I look forward to having each of you back to do so. So Matthew, I'm going to come to you last because you have something to plug. Blake, where can everyone find you online to connect and continue the conversation?
Yeah, I'm on Twitter at the B Richmond, also on Telegram at, I believe, BR Capital.
If you can't find him, ask him on Twitter. He'll be able to give it to you. Thank you so much, Blake. Gary, to you, where can everyone find you online?
Yeah, sure, Kyle. Gary Fowler, LinkedIn is the best way. Gary at gsdvs.com, and I'm also on Telegram.
Awesome. Brett.
Yep. Also on Telegram, LinkedIn, and our website is unventures.co.
Right. Huh? This is the most we've ever had Telegram dropped here. Usually it's LinkedIn everything. This is great. Blake, you've started a new trend. Rana, to you, where can everyone find you online?
Yeah, I'm on all kinds of social media. You can find me anywhere, but the best is go to my webpage, ranagujral.com. Send me a message. It does come to me directly. We'll have a conversation.
And before Matthew, just as a reminder to all of our listeners out there in the audience, when you do message anyone, whether it be an investor or someone you want to engage with, make sure you provide context. So to any of the investors that you want to follow up with, including myself today, make sure that you mention VCTV. So that way we have context as to where you may have heard of us from to continue that conversation. Just a note, as we've talked about in previous episodes, Matthew, close us out. Where can everyone find you and plug your book?
Well, subliminal advertising, it's Fifth Era and Blockchain Co-Investors. Just add a .com to either. And LinkedIn, I will connect to everyone on LinkedIn, but I just can't communicate on LinkedIn. There's too much inbound. So really, you have to go to the websites, decide if we're a good fit for you. And then if we are, we're always interested in speaking to investors, entrepreneurs. It tends to be more nuanced, but we do have relationships with, angel groups, VCs, and others. So, and Kyle, I always enjoy your events. So thank you for inviting me.
Thank you very much. Guys, gentlemen, thank you all so much for sharing your thoughts and insights and joining us today. Lena and I and the entire LA Token team greatly appreciate it. So much more to dive into, and we will have each of you back to do so. And to your audience, thank you for tuning in. If you like what you heard, click subscribe, give us a thumbs up. Reach out if you'd like to be on an episode like today as an investor to share your thoughts and insights. As an entrepreneur, again, this is a stage for you. You get the chance to come on and pitch your company to us as investors and to our live audience. Also, a big thank you to Elena and to the entire LA Token team for always making VCTV possible every single day on your devices. Thank you, Matthew, on your screens, wherever you may be around the world. I'm Kyle Ellicott, your host. You can find me on all social medias, including Blake's favorites. All jokes aside, you can find me online at Kyle Ellicott. We'd be happy to have you and happy to speak with you and continue the conversation. We'll be back here tomorrow and just in a little bit as well. Thank you, Gary. Talk a little bit more about machine learning and data, and we'll see you as well the rest of the week. Everyone have a great day.